My name is Zach Pasquarello, and I plan on going live every day on my YouTube channel at 11 a.m. Eastern Standard Time until I raise $5 million in my investment fund, Zip Capital. So I've got some pushback, and let me just explain the thought process behind doing this. So if you've been following me for a couple years now, first, my YouTube channel has been less of a income source. It's been less of a business. It's been more of a personal journey. I do my YouTube channel because I genuinely love doing this. I love talking about these things. I love teaching people. I love sharing my experience and my knowledge. So, yes, my YouTube channel has been successful. I've made a good amount of money from my YouTube channel, but ultimately, it's for me. It's my own outlet. It's my own personal journal. It's because I love doing this stuff. I love talking about this stuff. I am so passionate. I know I'm making a big change, and it's going to be a hard adjustment. And I want to talk about a few things. I am making such a huge sacrifice by doing this. And the reason I can say that is because I'm going to show you how much money I made last year from teaching people how to start a bookkeeping business. And I'm showing you this so that I can prove to you that I'm making a huge sacrifice. So I'm not just doing this selfishly because I want to try to encourage people to invest into my fund. And I'm going to get to all of that soon. But let me just tell you how much I made last year. So I have a course for sale. I teach people how to start a bookkeeping business. I made $100,000 just from selling that course in the last 12 months. And then I made an additional $67,000 from selling other digital downloads, one-on-one consultations, and I have a weekly group meeting that is $49 a month, and I've got about 40 people in that weekly group meeting. We meet every Monday at 3 p.m. It's a group of bookkeepers. I teach them. It's a live Q&A. I made $67,000 last year just from doing that, and I made $25,000 from YouTube ad revenue. I bring all of that up, not so you can think I'm cool or rich, but because you can see how serious I am. I bring that up because I'm giving that up. I could just continue to do what I've been doing. I could try to squeeze every last dollar out of my YouTube channel, out of teaching people how to start a bookkeeping business. But here's the thing. I'm not passionate about it anymore. I don't want to do it. No amount of money would make me want to continue doing that simply because I'm not passionate about it. $100,000 bookkeeping course, $67,000 consultations, $25,000, almost $200,000 I made in the last 12 months doing the bookkeeping thing, teaching people how to start a bookkeeping business. I bring that up so that you can understand how serious I am about this transition. So I'm not just doing this to try to make more money, because honestly, there's a good chance I might actually make less money this year because of this change. But I tell everybody, I'm practicing what I preach. If you want to start a bookkeeping business, if you want to start any business, you have to make sacrifices. You have to be willing to quit your full-time job. You have to be able to quit what was comfortable and try something new. If you believe in what you're about to do, if you go all in on this new business, whether it's bookkeeping business or any other business, or maybe you're going to try to start doing private money lending, if you go all in, you're going to have to make sacrifices. And I am doing that. I am right here with you. So if you're thinking about starting a bookkeeping business, I know how you feel because you probably have a full-time job, just like I basically have a full-time job. Basically, Harrisburg Bookkeeping is my full-time job, and I am going away from that, and I'm transitioning to running Zip Capital and private money lending. Another thing, you all know, I make about $50,000 per month in my bookkeeping business, and I'm not going away from that. I'm not stopping that. I'm not firing my clients. I'm not selling my bookkeeping business, but I did stop marketing my bookkeeping business. And so if there was ever more of a strong sign that I am all in on Zip Capital, the fact that I'm giving up a $200,000 a year income stream from education, $50,000 a month from my bookkeeping business, the fact that I'm going away from that and moving into private money lending and Zip Capital, that should speak volumes to how serious I am about the potential for private money lending and Zip Capital, and how just all in and focused I am on trying to make this thing work. So I hope you can all feel my sincerity, my authenticity, my truthfulness. Like, yes, of course, I'm here to try to make money, but we're all here to try to make money. So the other thing I'm going to say is, can I simultaneously teach you how to do private money lending and also shamelessly raise capital in my investment fund? And I've been thinking about this a lot over the past few days because, trust me, if you think that you're upset about this transition, trust me, I have been thinking about this nonstop for the past 2 weeks. So I'm right there with you. It's a tough transition, but I know it's going to be a good one. So can I simultaneously teach you about private money lending and also shamelessly raise capital in my investment fund, Zip Capital? I think the answer is yes. And here's how I know the answer is yes. Because all of these videos, I'm going to literally teach you how to do your own private money lending with the understanding that if you want to do it, do it. I'm going to give you all the tools. I'm going to teach you everything I know. That's kind of the whole point of this channel. I teach you what I know. I share my experiences. But then, of course, I'm also going to sprinkle in a few pitches. I'm going to sprinkle in a few side notes. Hey, if you don't want to do lending on your own, I have this investment fund, Zip Capital, offering 8% up to 12% fixed returns to accredited investors. There's a link in the description. Register on my website if you want to learn more. If you don't, totally fine. I'm going to continue making these free videos every single day. I am so passionate about private money lending, and I have a wonderful audience. I've got bookkeepers and accountants, CPAs, CFOs. I've got very analytical, mathematical, smart viewers. So here is my proposition to you. Take what I've taught you about bookkeeping. Start a bookkeeping business. That's your golden goose. That's your cash cow. But then follow in my footsteps. Do what I did. Start private money lending if you want. I think it's great. I think it's the best thing since sliced bread. I think it's even better than sliced bread. I think it's the best thing since ChatGPT, since the internet. I am all in on private money lending. Let me give you a quick example. Yesterday, we did a $300,000 loan. I'm going to make 1% per month, $3,000 per month, and I charged 3% origination fee. And this is a returning borrower. So I did little to no work. Literally did almost no work. I looked at the house, I looked at the scope of work, I looked at the after rehab value, and we sent $300,000 to the title company. So I'm going to make, and it's only 6 months. All my loans are short term. So I'm going to make 3% at closing, $9,000, and then 1% every month for 6 months. So that's 9% in 6 months. I'll get my money back, do it again, make another 9%. That's 18%. And I'm doing that consistently, reliably, and all my loans are secured by a mortgage. This is mind-blowing. Now, of course, you need a golden goose, you need a cash cow to get to this point. You have to have income coming in, you have to have money saved up so that you have $300,000 to lend out, but you can get started with $5,000 or $10,000. You don't need $300,000 to get started. You can start with $25,000 or even less, but I'm getting 18%. Reliably, consistently, with my own loans, lending to real estate investors. Everything's secured by a mortgage. So I am so passionate about this. I am so bullish on real estate private money lending that I'm going to continue talking about it until I teach all of you how to do it on your own, or I raise $5 million in my investment fund. So I got this number right here, $258,487. That's how much I have in Zip Capital right now. I'm going to keep you guys updated. I'm going to make a video every day until I raise $5 million. Okay, so let's jump into the education portion of this video. Like I said, my goal is to teach you about private money lending, literally so that you can do it on your own. That's the goal. So if you have any questions, drop a comment in the chat and I will do my best to answer everybody's questions. But if not, I will just go ahead and get started. How to analyze a loan deal. So underwriting is the most important thing that we do. You have to mitigate risk because we worked so hard to make our money. Now we got to keep our money. 18% returns are cool, but if you don't get your money back, 18% returns all of a sudden turn into negative 100%. if you don't get your money back. So you got to mitigate risk. You have to underwrite deals. That's the most important part. But the cool thing is, my audience on here, we all are financial people. So you should be able to learn how to underwrite deals. So you're going to evaluate the property. You're going to look at the purchase price of the property. You're going to look at the current value of the property. So typically, we do what's called an appraisal. But as a private money lender, with these real estate investors, if they have experience, a lot of times I will lend without doing an appraisal. So we do what's called, I forget the term for it, it's like a desktop appraisal. So basically we just do research on the property. We look at pictures, we look at comparable properties, and we do our research. And then we can basically do a desktop appraisal without actually going to the property. So yesterday, I already talked about ARV and LTV and LTC in a lot of detail. So I'm not going to go into a ton of detail with that, but instead, I'm going to talk about how I evaluate the borrower. So this is perfect for us bookkeepers and accountants. Like I'm looking at tax returns, financial reports, bank statements, pay stubs, P&L, balance sheet, everything that we have learned how to review and analyze and create as a bookkeeper. Now we're just using that experience to underwrite borrowers for private money lending. So that's why I decided to keep my current YouTube channel, because this is so applicable to all of you. Everybody who I've been teaching how to start a bookkeeping business, now you can learn how to be a private money lender. And it starts with underwriting. So I'm looking at tax returns, and here's a secret, just between you and me. Yes, I'm reviewing the documents, but honestly, more so, I'm reviewing the borrower's organization and communication skills. So I have a long list of documents that I request. It's just long enough that it tests their organization and communication, but it's also short enough that it doesn't scare away too many interested borrowers. So it's just long enough that they have to test their organization. And so if I send this list of document requests to a borrower, and if they never get back to me, I know they weren't serious. That's fine. But if I send this list of document requests to somebody and they send me everything in a Google Drive in 2 hours, then I will think, wow, this person is organized, they're serious, they can communicate effectively. This is a good sign. This is great. So this is the first test. Can they quickly and effectively deliver me my requests? And then when I get the tax returns, if they don't have any experience, I want to see decently strong income. $60,000 is about my benchmark of annual income that I want to see. There's really no rhyme or reason. That's just kind of the number that I picked up out of my head. I wouldn't go much less than 60. And here's the key. If they have no experience, if it's your first time flipping, nothing against low income earners, but you just don't have as much cash flow from your job to pay me back in case something happens. So I'm not saying that low income earners are any less worthy of getting a loan. I kind of am. I'm just saying that their ability to pay me back in the event of something bad happening, their ability to pay me back is not as strong as somebody else who has 60, 80, or $100,000 of income. Okay, so I'm looking at tax returns. I'm looking at their income. And then also, I don't lend to anybody who has not filed their taxes. So you have to have your 2023 taxes filed. I give you a pass for 2024 because a lot of people go on extension. But after October, then 2024 taxes need to be filed. So I'm looking at tax returns. I'm looking at financial reports. I want to see your P&L. I want to see your balance sheet. And once again, I'm not doing a crazy analysis. I'm not spending 3 hours doing a deep dive line by line. I'm first of all, I'm checking to see, do they have a P&L and balance sheet? Can they send it to me? And then second of all, I'm just seeing, like, are there any red flags? That's really what I'm looking for. I'm not necessarily looking to qualify my borrowers. I'm more so looking to disqualify my borrowers. No tax return, disqualification. Less than 60K of income, disqualification. Negative income, like really alarming negative income, disqualification. Way over leveraged on their balance sheet, possible disqualification. Pay stubs. If they don't have any experience, or they're not an entrepreneur, or they don't have financial reports, Let me see your pay stubs just to support your tax returns. Let me see that you currently have a job. And then all of this also comes with a caveat that everything is up for interpretation. Everything can be explained. I'm not a bank, so I do offer speed and flexibility. And with that flexibility, there is an opportunity to sell your story. Private money lending is just as much about financial underwriting, deal analysis, as it is about relationships. So if a borrower, maybe perfect example, 2 years ago, one of my borrowers spent 6 months in Africa on a missions trip. So his income was pretty low, but he had 10 years of experience remodeling houses. He had a great story. We spoke on the phone for 30 minutes. I liked what he had to say. I ended up lending to him, and it was a great decision. I lent to him 4 different times, and he paid back all of his loans, no problem. So just because his income might not have been as strong, he had a good story. We built a relationship. I was able to lend to him. So private money lending, we offer speed and flexibility. With that flexibility, there's an opportunity for some flexibility with the underwriting. Okay, I'm going to go to the questions real quick. Alec, you said underwriting does not take too much of your time. So I'm curious, is there more content in private money lending that will lessen bookkeeping content? I'm curious, is there more content? I'm not sure what you mean, Alec. Maybe if you could clarify your question, I'd be able to answer it. I'll move on to Steele. How would this look for someone with about $20K available to lend? Obviously, growth will be slower, but does this process work the same as what you're doing? Yes, Steele. So I'm going to take a brief pause in my explanation of underwriting. So just to get to you, Steele Sadler. So what you can do with $20,000. So as a lender, I lend on the purchase price, the purchase of properties. So chances are you're probably not going to find a $20,000 house that you can lend on the purchase. So here's the key difference. If you lend on the purchase, you have the first mortgage. You are the first lender, first mortgage. If you only have $20,000, you might lend in a second position. So somebody else, so maybe let's just say $100,000 property. Somebody else lends $100,000 for the purchase, but they need $20,000 for the rehab. So you could come in and you could lend $20,000 for the rehab. But keep in mind, it's riskier. So you've got a second position mortgage. So if you were to lend $20,000, what I've done in the past, I've charged 15% interest, and I would do a $2,000 origination fee, which is pretty significant when you look at a 6-month terms. So I would lend $20,000 for 6 months, 15% annual interest, $2,000 origination fee. Go ahead and do the math. What is 4,000 divided by 20,000? I think that is 20%. 20% plus 15%. If you lend $20,000 2 times per year, you could make 35% on your $20,000. It's riskier because you're doing a second position mortgage. So if you do a second lien, second position mortgage, here's what happens. In the event of a foreclosure, the first position gets paid back first, you get paid back second. So if that $100,000 house only sells for $110,000, then the first position mortgage is getting paid off $100,000, you're getting paid off $10,000. So ideally, you want to be very careful doing second position loans, but if you only have $20,000, it might be a good alternative. But absolutely, $2,000 origination fee, 15% interest, you can make potentially 35% on your money if you do it all correctly. And I'm sure I should probably do some sort of legal disclaimer. This is all for informational purposes only. Definitely consult with your financial professional or your attorney before you do anything. Don't listen to anything I'm saying. Don't do anything I'm saying. Always consult with your licensed professionals before you make any decisions. Okay, so Steele, hopefully that was helpful. Alec, if you could reframe your question, I'll do my best to answer it. But let's get back to underwriting. So evaluating the borrower, tax returns, financial reports, pay stubs, bank statements. So I review bank statements. Typically, I will ask you, what is your liquidity? How much do you have in the form of cash reserves? And so they'll usually tell me, I got $40,000. I'll say, great. Let me see your bank statements that show $40,000 of liquidity, because you could tell me anything on paper, but let me actually see the money market account, the bank CD, the checking account, the savings account, maybe the IRA account that you plan on pulling from. Let me see the accounts, the brokerage account. Let me see the accounts that prove that you have $40,000 of liquidity. What else? If you guys have any questions, Alec, let's see. Will you still be posting as much bookkeeping content, or is it shifting more toward private money lending now? So if you've been following me on social media, pretty much all my content is all about private money lending and trying to raise capital for Zip Capital and my YouTube channel. So I'm pretty much done posting about bookkeeping business on my YouTube channel, but I'm going to keep all my videos up. So they're all still there. You can revert back to all of my old bookkeeping videos. They're not going anywhere. I feel like I've made probably close to 100 videos on how to start a bookkeeping business. I don't know. I feel like I've kind of talked about everything there is to talk about. So I'm kind of done talking about the bookkeeping business, and I'm just going to transition to private money lending, but I'm going to keep up all the bookkeeping videos there. Somebody made a comment yesterday in my video, and I thought this was really interesting. He said, I was asking people, should I create a new channel? And he said no, because the channel is your journey. The channel is a representation of your entrepreneur journey. And I thought that was really cool. And I thought that was so true. I started my YouTube channel talking about my trucking company. And then I stopped talking about trucking, and I thought I was going to make everybody upset. And I just started talking about bookkeeping. And then I grew to 40,000 subscribers. And now here I am. I'm not talking about bookkeeping. People are going to be upset. That's okay. We'll get through it. Now I'm talking about private money lending, but it's still, here's the thing. It's still applicable to bookkeepers. This is still a great transition. Once you get your bookkeeping business up and running, you can do what I did, and you can transition into private money lending. All right, Steele, you said, since I would be taking on more risk, ensure I reflect that risk with higher interest rate. Exactly. This will shy away the bad borrowers and mitigate my risk as much as possible. Exactly. Yeah. You want to increase your payment because the risk is higher. Absolutely. So you still want to do all the same underwriting. Make sure you have an attorney draft your promissory note and your mortgage. So that's what I have. I have an attorney draft all my documents for me. Okay, so let's talk about terms. So some people like to do 12-month terms, but I make all of my private money loans 6 months with an option to extend. So I charge 3% origination fee, 6 months. And so far, not too many people have been upset about my 6-month terms, because these flippers usually flip their properties in less than 6 months anyway. But there's an option to extend for an additional 3 months, and that's a 2% fee. So if you borrow $100,000 from me, I'm going to charge a 2% extension fee. So that'll be $2,000, and that'll be paid at the time of the extension, and you'll get an additional 3 months. You're still paying your 1% per month interest, but there's also that additional 2% extension fee. Here's the reason. I want to incentivize these guys to flip quickly. I don't want my borrowers sitting on these properties. Just bad things happen when real estate investors sit on properties. So I want to pressure them nicely, but still pressure them and encourage them to sell these properties as quickly as possible. All right, Tamika, you said, are you still open to being a mentor for bookkeepers? I do still have a link on my website where you can schedule a one-on-one consultation, but I had to increase the price because I am so busy. I'm charging $175 for a 30-minute meeting, but here's the problem. In the past 12 months, I made close to $1 million across all my businesses, and that ends up being about a $500 per hour fee that I'm earning. So I'm making about $500 per hour right now through managing all my businesses. And so it's really hard for me to take less money, take more time, and help people one-on-one. I just quite simply don't have the time for it right now. So I love making these videos. I love hosting group calls. I love helping people, but I just don't have the time to currently help people one-on-one. But there is the option, $175 for 30 minutes. you can still schedule one-on-one meetings with me on my website. Okay, so short-term payments, monthly interest only. All my loans are set up so that you're only paying back interest. So most mortgages are principal and interest, but these are just interest-only payments. Real estate investors seem to like that because they're paying less per month. So they're not reducing their principal. It's easier for you to track as a lender, and investors like that because their cash flow is less on a monthly basis. They're spending less on a monthly basis. Okay, so let's talk about legal documents. We've got 5 minutes left. Let's talk about legal documents. So I have 3 things: promissory note, a mortgage, and a personal guarantee. I have my real estate attorney draft these 3 documents, every single loan. He charges me $200. I just simply pass that along to the borrower. The promissory note is just that. It's a very short document. It's 2 pages, and it's just a promissory note between the borrower and myself as the lender. And it just briefly outlines the terms. Like, interest will begin accruing on June 17th. Your first monthly interest only payment will be due August 1st. There will be a 3% or a 2% extension fee. If this loan goes beyond 6 months, the full principal balance is due December 17th. And this promissory note is intended to be secured with a first position mortgage on XYZ property. So that's the promissory note. Very short, 2 pages. And then the mortgage is a little bit longer. The mortgage is like 8 pages. Honestly, I don't know too much about it. That's why I have the real estate attorney to draft the documents. And then the personal guarantee is just the personal guarantee. So I only lend to companies, but then the individual owners of the company have to personally guarantee the loan. That way there's no funny business. That way they can't declare bankruptcy with their LLC or try to get out of their LLC and get out of the loan and the mortgage. Personal guarantee every time. And here's my logic. If I ever got pushback on that, I would just say, yep, no problem, not interested. Because if you are a real estate investor, if you're not willing to personally guarantee the loan, that's a red flag to me. That must mean that something shady is going on, or you don't believe in the deal, or you don't want to be personally associated with the deal. 99% of the time, it's no problem. So if there was a 1% where someone's like, what, that's ridiculous, I'm not going to personally guarantee the loan, no problem. I want nothing to do with that. I will end the conversation there, and I will not lend to you. Absolutely no questions asked. Yeah, personally guarantee every single time. So the real estate attorney drafting the documents, I probably could save $200 and draft the documents myself. But my logic is, in the event of a foreclosure, if the borrower defaults on the loan, if I have to seize the property, then I want to be able to leverage my real estate attorney. And so I feel like I would reach out and be like, hey, time to put your documents to the test. The borrower defaulted. Let's go ahead and use these documents and let's go through the foreclosure process. I feel like it would almost like pressure the real estate attorney to be like, yep, okay, like I drafted these documents for you. Like now, not that he's responsible for it, but he kind of owes me to, like, as an attorney, you know what I mean? Like, he drafted the documents. So I feel like it's kind of his job now to at least point me in the right direction to help facilitate this foreclosure. All right, Dan, what's up? What is your vision about growing Harrisburg bookkeeping going forward with Zip Capital in the picture? So I will briefly explain this, and then I think we have to end the video. Right now I have 87 bookkeeping clients. I have 1 subcontractor. He is working on 5 of my 87 clients. So I had 82 clients in January, and then I got 5 new clients this year. And every new client I get, I've just simply passed off to my subcontractor. So I'm not actively growing my bookkeeping business, but I am taking on new clients. I just pass them off to my subcontractor. So right now, about 90% of my time is spent on my bookkeeping business, and 10% of my time is spent on Zip Capital. So maybe I'm over here. I want to slowly shift to where 90% of my time is private money lending and Zip Capital, and then 10% of my time is running my bookkeeping business. But I can't do that yet because it's my cash cow. It's my golden goose. So I need to preserve my bookkeeping business for at least a year or 2 so that I can get to the point where I can maybe sell my bookkeeping business, maybe hire a couple employees to manage the day-to-day. I don't know what that looks like. Right now, I have to keep doing the bookkeeping so that I can keep paying my bills with my bookkeeping income. But once I raise $5 million, so I'll end with this. Like I said in the beginning, I am making about 18% to 20% on my cash. And so if you want to be a private money lender, go ahead and do it yourself. You can make 18 to 20%, maybe. Legal disclaimer, don't listen to what I say, consult with a professional. You might be able to make 18 to 20% on your private money loans with real estate, at least based on what I've done. I have done it. I'm going to pay my investors 8 to 12%. On average, let's say 10%. So here's my logic. If I can make 20% and pay my investors 10%, I can make about 10% on my in Zip Capital. So if I raise $5 million, the idea is I can make about $500,000 profit per year managing my investment fund. So once I get to that point, I'll be confident. I'll be able to stop my bookkeeping business or pass off my bookkeeping business or hire employees, hire subcontractors to manage my bookkeeping business. And then I can just focus on Zip Capital. But that's what I want to be when I grow up. I want to manage Zip Capital. I want to be a private money lender. The ceiling is so much higher. I'm pretty much capped out where I am right now. At 87 clients, I'm making about $40,000 to $50,000 a month. I'm pretty much capped out at $500,000 per year with my bookkeeping business, running it myself. But the investment fund, the ceiling is so much higher. I can make $500,000 managing it myself. I could probably manage $10 million and make $1 million. I could probably manage $20 million with 2 or 3 employees. And you just start adding zeros onto these things, and just the ceiling is so much higher. So truthfully, I want to encourage all of you to consider trying private money lending if you want. If you want to try private money lending, give it a try. I'm probably going to have to start throwing legal disclaimers in here because I'm talking about returns and investments. So don't listen to anything I say, consult with a professional, but I'll just teach you what I've been doing. And if you want to learn from what I've been doing, I will be happy to share all of my experience and all of my knowledge. I appreciate all of your support. This is going to be a tough transition, but I know this is going to be the right move. So I'm going all in on Zip Capital. I'm offering 8 to 12% fixed returns. Check out the links in the description of this video. Reach out if you have any questions. I can't wait for this journey. I really appreciate your support. I'll see you all tomorrow at 11 a.m., same time, same place.